Hello and welcome back to the MedSpa Growth and Profitability Show. For all of you that are watching the video, I apologize, I'm in my hat today. It was kind of a quick thing and my calendar got a little messed up and I figured I might as well just jump on anyway because life happens as a CEO, as an owner of the company, and you just got to roll with it. So I'm excited today to have on Ramin Monfared, who has two medical spas in the Houston. Are they both in Houston?
They're both in Houston, yes.
They're both in Houston, Texas. So welcome, Ramin.
Thank you very much for having me.
I'm really thrilled to get on this podcast because we're going to talk about some of my favorite topics, such as increasing revenues, cutting down costs, and essentially having better cash flow and more money in the bank. Before we jump in, can you tell us a little bit about your background?
Sure, I'd love to. So actually my background is in banking and finance. So I guess I've got a jump start on some people. I worked in banking for 8 years. I was head of marketing, communications, and then I went into investment management, private equity. I had my own private equity firm in London, ran a fund that had about $100 million in it. And we invested in companies around the globe, small, medium-sized companies.
Amazing.
So that was that. And then I came to the US 3 years ago. I run these businesses together with my sister, who is the physician. She's, like myself, graduated in the UK. Both of us actually from King's College in London. And then she was medical director for 8 medical spas in the London area. She's written books on weight loss. She's appeared on TV in the UK talking about that and written in women's magazines regarding medical weight loss. She moved to the United States about 9 years ago, graduated from Columbia, and is now in family practice, but has always wanted to own a med spa. But like most physicians, she would admit she's not great at business. Mm-hmm. And I know a lot of physicians own medical spas. Some of them are very great business people, but a lot are not. And I guess we just make the perfect couple.
And that's so true because most people come into it because they love the aesthetic space. They're a physician, they found a natural fit, but they don't have a business background at all. I would say the majority, so definitely a nice fit.
Absolutely. I mean, I understand that for a lot of physicians, they see the move into aesthetic medicine as a way to generate extra revenue, most of it cash-based, not insurance-based. And there's a lot of allure to that, but it's like any other business. It is the fastest way to the poorhouse if you don't know what you're doing.
Absolutely, especially when you're investing in marketing and
in devices, equipment. It can become very quickly very capital intensive, and that can be a path to disaster.
Absolutely. And so were you interested in the aesthetic space beforehand, or did you kind of just fall into it after your sister?
Actually, funnily enough, towards the end of my life as a private equity person, I got involved in a skincare company in the UK. And together with a colleague of mine, friend of mine, we set up a skincare business, introducing a skincare range that dealt with specific skin conditions. And we started winning awards in the UK for our skincare products. But I, at the time, was thinking of leaving the United Kingdom and moving to the United States. So I kind of left that behind. But so I have some knowledge, some background. Yeah, absolutely. And I'm one of those people that just loves to learn. So I, thrown myself fully into this, immersed myself in it. And I like to think now at this stage, I am a fair expert in the aesthetic medicine business, probably not from a clinician's point of view, but definitely from business perspective.
And so do you still have the skincare line or did you leave that behind?
No, I still have it. I still own a small percentage of it. I think it's about 10% I still own. My business partner still runs it in the UK. Yeah, absolutely.
Perfect. So tell us a little bit about what you guys, I guess, let me understand a little bit more. Did your sister open the med spa before you,
No,
or did
actually,
you both found it together?
so this goes back to my private equity days. I was actually looking to take over struggling businesses. So that's what we did with both our locations. We took over from people who had unfortunately got themselves into a financial situation that they couldn't get out of. So I stepped in, I helped them firstly to organize their businesses, and then I took them over. So that's been our approach. We've gone from 500,000 turnover to 1.4 million in a year and a half. So we're doing something right.
Absolutely. And for our listeners, are you looking to take more over?
Absolutely. I'm always on the lookout. In fact, I was in your neck of the woods just a week and a half ago in Florida to look at a couple of potential acquisitions. Yeah, absolutely. And not just in the Houston area. I mean, Houston has been great to us. It's such a dynamic city. It's growing soon to become probably the third largest city in the United States. So obviously there's been huge potential for growth. But we're also looking at other places outside of Houston, not just in Texas. I was in negotiations to acquire a medical spa out in Beverly Hills in West Hollywood. Unfortunately, that didn't go through, but we're always looking at acquisition opportunities, and there's plenty out there. But it has to be the right one. It has to be the right one.
Yeah. And we're getting off topic a little, or what we were going to talk about, but when you say it has to be the right one, there's a lot of things that come into place that people don't think about when they're looking for their location. They are just trying to find a location that has a rent low enough where they can afford to move in, but they don't really think about the longer vision. So I'm sure that has something to do when you go in, when you're looking for ones to acquire.
Of course it does. Of course it does. Look, I am not looking at, most of the places I've looked at have been well established. So I'm not looking at somewhere that was opened a year ago. I don't want that. That requires a lot more energy. That requires a lot more intensive kind of involvement. What I'm looking at more is places that have been established 5, maybe, but both the places I acquired have been established for over 10 years. So they've been around for a while. They've got a loyal customer base, but what they're struggling with is debt, basically, that they've taken on over that period of time. And also that's therefore holding them back from growing the business. So where I come in is I take over the business. By purchasing the business, I help them to either pay down their debt or in some cases just to walk away from the debt. And then that allows me to then put in my, some of my own capital and then to grow that business, to take it on to where it needed to be, unburdened by the debt that it's been carrying. So that's the opportunities that we're looking at.
So for med spas in general, they acquire the debt because they need cash flow. So some of them take out merchant cash advances where they're very high interest rate, things like that. Can you give the listeners and viewers some tips on managing cash flow?
Well, my approach always has been that I always put away 10 to 15% of the cash generated in any month aside for the times when it's going to be raining. And there is going to be times when it's going to be raining, which allows me not to have to go to, high interest lenders. Yeah. I mean, in the other business that I took over, they had some debts that were at around 40-45%, maybe higher. That's just crazy. That's just throwing money down the drain. So you've got to learn to be strict with your cash flow. You've got to be, it's almost a religious thing, just put it away. Put away 10-15% of your cash flow when you can. I mean, I understand it's hard for businesses. Some businesses are basically living, if you like people, paycheck to paycheck. Yeah. I get it. But you can, if you make the right decisions about your business, you can get yourself into a position where you are creating enough surplus cash flow to put aside. And it's all about, look, profitability is not something, it's not rocket science. It's a function of either increased sales or cost control. But it shouldn't be binary. It shouldn't be one or the other. It's got to be both. You've got to manage your costs and you have to increase your sales. Not just most business owners, and not just in med spas, just constantly looking at increased sales, but they're not keeping an eye on their costs. And what do we mean by costs in terms of med spas? Well, it's quite simple. Your main cost is obviously your staff. That's your main cost. So you've got to keep an eye on that. But also what happens a lot of the times is that people introduce services with high disposable costs. They also go after clients and services which don't bring in enough repeat visits. Yeah. For me, the measure of a customer's retention is 6 or more repeat visits. For me, if a patient comes in 2 or 3 times, that is not a retained patient. A retained patient for me is 6 visits. So we look at that. We produce reports and we look at that ratio. We look at where are we? Now, I would say the general business on repeat visits for 6 visits or more should be around maybe 8 to 10% of your business, maybe slightly higher, 12. Now we're at 7.9. I'm not happy about that. So we look at so when we make our annual plan, we look at what do we need to do to increase that from 8 to 12%? What do we need to do to retain customers that we lose after 1 visit? So what services do we need to provide? How do we need to communicate with those people? Are we doing enough with the initial consultations, with the post-treatment consultations? So these are all factors that go in. But, if you actually break it down, April, it's very simple in terms of services. Yeah. Yes, it's great to have a business with a high amount of injectables. But if you look at that model, really in the long term is not sustainable because you are constantly having to go out and get new clients. Mm-hmm. Because a person comes in, they have a toxin injected. You won't see them again for a couple of months. Or a filler, you're not going to see them again for 6 months maybe. So if they come in, they have 2 treatments a year, that might be worth $500.
And most people aren't even doing a cross-sell when they come into the office.
Exactly. But if you have someone who's doing hydrofacial, they need that once a month. That's $170, $150, depending on where you are, per month. Now you add that up to 12 months, that client is worth far more to you than someone who comes in for an injection. So, and you don't have the disposable cost is not as high because you don't have the product cost. When Botox costs $610 per vial, okay, even with the greatest rebate in the world, you're going to get it down to maybe $560. It's still a high cost item. So we look at that. We look at diversifying. We have treatments that have very little disposable costs, but require repeat visits. That for me is the place to be. That's where you're going to make money. Absolutely. That's where the profitability is.
And do you have those clients on subscriptions for instance, the hydrofacial? Do you try to sell subscriptions?
It's a very good question. I think some things in aesthetic medicine are becoming commoditized. And what do I mean by that? I mean that they're getting to a point where it doesn't make sense to charge them every time they come in. It's better to put them on a subscription plan. So I think, for example, laser hair removal is going that way. I absolutely believe that's the way to go with laser hair removal because, firstly, let's be honest with our patients. It's not a one-shot deal. Their hair is not going to stop growing back. Some people are lucky. They may. but they're in the minority. So most people are going to have to come in more than 5 or 6 times a year. So it makes sense to put them on a subscription plan. So that's one of the areas we're looking at. We have looked at having kind of membership plans and so on. We haven't implemented any thus far, but maybe there is room for growth in that. But definitely laser hair for me would be, it's an ideal candidate for a subscription model.
So I'm going to ask you, I'm going to jump around again, I'm sorry, but I'm intrigued because you also acquire the businesses as well. And what we teach in our agency is that we want subscriptions, we want memberships because it looks good if you're going to sell it, and that is money coming in. Would that be something that you would be looking for, or would that add value to you?
I think when you're acquiring a business, one of the first things you want to look at is their cash flow.
Yeah.
So how much cash is the business generating? Now, of course, why is that important? Because that tells you if you can free that cash up. If you got rid of the burden of some of the costs, how much cash can you free up? So that's very much a banking mentality. So I come from that. So I look at that. I look at, okay, this business is struggling, but is it generating cash? And in both the instances of my acquisitions, yeah, they were. They were generating a lot of cash. It was just that a lot of the cash was being used to service debt. But if I was able to free that business from that debt, then that was excess cash flow that could be reinvested in the business. So that is important. Of course, the subscription models, what that does, it helps cement that regular cash flow. So you know that every month on the dot, that amount of cash is coming into the business. So yeah, of course, that you would take that into consideration.
And also, we do marketing on the agency side for medical spas. And one of the first conversations or the first questions we ask the potential people we were going to work with is, do they know the lifetime value of their patient?
Yeah.
And I would probably 1 out of 10 could answer that question. And sitting, across from you or on the video, I know that you're going to be able to answer that question. Do you think that it's something that the medical spas in general just really never sat down and did the work to find out? Or do you think they don't really think they need to know it?
I think honestly, it's probably both cases. I think sometimes it's difficult for them to work out lifetime value because it depends on the systems you have in place to be able to measure that. I know from my own situation, it's not an easy one for me to do. I can do it, but it's not easy because I don't have a fully integrated system yet. So my payment processing is done through a separate system than my scheduling. And sometimes even the scheduling software and the management software doesn't allow you to do that. But if you had both of those integrated, it is absolutely important to understand how much a client is worth to you. Absolutely. That should be number one on the list of things you do in terms of your management control, to know who are your most valuable customers. But more importantly, what are your most valuable services? What are the cost of providing those services? That's, the more I'm very analytical. That's always been my background. I started off as a business analyst. So for me, I am very, very figures driven in terms of sales and marketing. I will not undertake any marketing unless I totally understand what my return on its investment is going to be. So that's very important. I want measurable campaigns. I want measurable business activities. I don't think you can make any decision without having the figures at hand.
And that's one thing that I really have an issue with is when people decide to just mail out some flyer, like postcards or even a TV commercial, because you cannot track the results.
I mean, I'm glad you mentioned that, because that was one of the topics I want to talk about, which is how do you go about increasing revenue in sometimes in very saturated markets. And Houston is very saturated. I mean, my two med spas are actually only 5 minutes apart from each other. in the Galleria area of Houston, where there is, I could probably say, at least a dozen or more other med spas within a 1 mile radius. Yet we've managed to grow our business. So how do we do that? Well, you got to understand the playing field. You got to understand where you are. This is the 21st century. For me, I was brought up in traditional marketing, both above the line, below the line. You know, I was head of marketing communications for a major bank. So we ran TV commercials, we ran radio, we did sponsorship, we did broadsheets, newspapers, magazines. That was above the line. Below the line, we did direct marketing, whether it was, through phone, through mail, through email, we did that. Mm-hmm. But the world, I've realized, has changed. That's not where my customers are anymore. My customers are on Google, they're on Facebook, they're on Instagram, they're on a variety of digital platforms. And how do I reach them? Yeah, in a perfect world, it would be great if you had 100,000 followers on Instagram who happen to be within a 1 mile radius of your business. But that's not going to happen. So it's paid to play. That's the game we're in.
Yeah, without a doubt.
We focus heavily on digital marketing and we pay to play, but it works for us. Yeah. We can measure it. We know how much we spend. We know how much we get back. I can tell you, for example, for one campaign, for PRP hair restoration, we are probably almost the #1 in Houston for that in terms of getting clients. We get one new client probably per day, if not two, for that service. How do we manage that? We've managed that through Google Ads, through Facebook campaigns. Mm-hmm. We know we've spent to date $10,000, but we return $40,000. So those are measurable. I can measure that. I know what I'm doing. I know where the money is going, and it worked for me.
And it's such laser-focused targeting with digital marketing. That's why I'm surprised people still send out the postcards. But every week, I would say I would have 7 to 10 between medical spas, dentists, and like a random eye doctor.
Absolutely, and even scattershot emails, that go out. Yes, you're going to get maybe 0.5% or 1% of people answering back. If you've been in communication with them constantly over a 12-month period, not always trying to sell them stuff, then you're probably looking at a 3, 4, 5% response rate. But even then, I think if you want to acquire customers, you have to go out there and you have to know where these people are looking. You have to understand how people look for services these days. And you've got to speak to them on that platform. And unfortunately, whether you like it or not, you have to pay to be able to reach them.
I'm so glad you said that. You really have to pay to play. And if you think that just posting on social media, they're going to see you, they're going to want to do business with you that one time they see your post, if they see your post.
Yeah, absolutely.
Definitely.
I would love to have thousands of followers on Instagram. Both my med spas don't have more than 500 followers on Instagram. Look, the reality is you could have 10,000 followers on Instagram, but how many of those people are actually in your locality?
Yeah.
How many of those people are actually potential clients who are going to come in?
Yeah. So, and that's funny you said that, because we actually just had a new client come on board, and the woman was talking to me, and she's amazing at what she does, but her biggest focus was she wanted more followers, and should she hire this company to just buy her followers? And I said, no, because they're not going to. It looks good for your ego. It makes you feel good that you have 10,000, but that doesn't resort to customers. No. So I'm so glad you
better, like you said. It's like, oh, I've got 1,000 likes. Wow. That it's kind of emotional satisfaction, but it's not financial by any means.
So, Ramin, let's talk about some more ways that that everybody can cut costs. What are some of your top tips?
One of the most important things, April, is not to chase the next bright, shiny object. Because there's always
equipment, right?
The fact is, it's kind of a virtual circle if you look at it in terms of aesthetic medicine. So, most physicians or business owners, medical spa owners, they want to get clients in, service them, and get them out. Okay, so they're looking for something quick. The device manufacturers come along and say, we've got the perfect solution for you. Put this person under this machine for 15 minutes, they're done. And all you have to do is get 2 new patients a month and you're good. Off you go. And the owners go, that's just brilliant. Of course, it's a no-brainer.
No money down.
No money down. They end up committing to $100,000, $200,000 worth of equipment. That's without even taking into account the long-term depreciation and also the finance costs. They quickly find out, actually, it's going to take more than 2 patients a month to break even. And, I understand the attraction, but people have to think long and hard before they invest in any kind of device. They got to look at not only how much is it going to cost me to acquire new patients, what are the disposables on that?
Mm-hmm.
The disposables on some of these devices are very high. And so that's cutting into your profit margin.
And that's why a piece of equipment seems very low and affordable, because they're making it on the back end.
Absolutely. So you've got to be careful not to always chase the next shiny object. I know people who've bought a device and literally 3 months later, they're persuaded to upgrade to a newer version of that device. It's not an iPhone we're talking about here. We're talking about hundreds of thousands of dollars worth of investment. And you have to understand your business inside out. Just having the next shiny object is not going to bring patients through your door. So that's one thing.
I would also probably tell everybody, everybody that's listening, make sure you're maxing out the equipment that you have.
Yeah,
as well, because most of them are not.
You're better off focusing on the equipment you already have. Absolutely. And making sure you're getting the payback on that equipment before you invest in something new. It's just common sense.
Yeah.
Dare I say it. But unfortunately, people are often driven by their gut, and our gut isn't always right. Sometimes the maths is telling you, the figures are telling you, listen, this is what you got to be doing. And we ignore it because, the manufacturers are very persuasive. And often they get our own colleagues to persuade us. So
and it makes sense. And in a perfect world, or if you are maxing out your other equipment and you can leverage and get the piece, then it makes sense. But and make it very attractive, and it makes, when they're explaining it, it makes financial sense when you're seeing the nice printout. And there is times when you need to invest in the newest, latest equipment, but you have to be in the right position too.
It has to be a prudent decision. Look, when I took over this particular location where I'm sitting now, it was owned previously by a plastic surgeon. He had 3 devices that he had bought in a space of 16 months that did exactly the same thing.
Oh, no.
What is the point of that? That's almost $400,000 of equipment that did exactly the same thing. Because he tried one, it didn't work, didn't get any patients, tried the next machine, that didn't work, tried the next, and
yeah,
it makes no business sense for me. So yes, of course, like everybody else, I get device manufacturers on the phone constantly bombarding me, invitations here, there. But you've got to learn to say no.
Yes, without a doubt. What is another area that our listeners can go cut costs right away, or something they can get quick, something that they can,
from.
Thank you. Yes. Something that they can implement right after this call that they should look at.
I think they need to sit down, honestly, very quickly, and on one sheet of paper, write out the services they provide and be honest about the cost of those services. And immediately look at focusing themselves on the most profitable of those services and going out and marketing those more. I give you, like I said before, a perfect example. why did I choose PRP hair restoration as one way of generating more income? Because I sat down and worked out the cost. How much does it cost me to provide that service? A lot less than if I went out and promoted fillers or Botox or my TrueSculpt 3D machine. That's just the reality. So I focused on what was going to make me the most money, and it works for us.
And it's it's not always the highest, almost never is the highest ticket item you have to think about.
Not, absolutely not. So once you know that, you can very quickly focus your marketing on that to get you ahead of the game. And you can get ahead of the competition if you go about it quickly and in the right way. If you, I'm not even though I have a marketing background, one of the things you have to know as a business owner is sometimes you don't know everything. So go to someone who does, but vet them properly. Look at what they've done. Look at what they've achieved. Speak to people who've worked with them. See what they say. And if you then believe this is the right person for you, then bring them on board. Let them do it for you. You don't have to do everything yourself. There are people out there who are experts in certain areas.
Yeah.
And it doesn't have to be hit and miss.
And I would especially say that with the marketing part, because however many YouTube videos you want to watch or things like that, there is a specific science to the Facebook, to Google Ads and getting the analytics. You might be able to get quick, fast results doing it on your own, but we really want your prospective patients pretty much know, like, and trust you before they even come into a consultation for you. And doing that is just not boosting a post or having one ad. You need to have multiple layers. So definitely make sure that if you're doing it yourself, you really are learning it the right way, because we see so many horror stories and thousands of dollars later. And then especially, I love that you said vet, see their results, ask them for proof, because there's so many agencies out there that are opening overnight, taking a quick online course and using other people's results to say, and we've seen so many people get burned that way too. So I love that.
I mean, the way I went about finding people to help me is I reached out to other people I knew in the med spa business. Listen, there was an old saying in banking, compete on service, but collaborate on technology. So, we don't have to be in competition with each other in terms of everything. There is things we can collaborate on as business owners. And I am more than happy to share my experiences, to even refer people to people I know, because, we're all in that. We don't have to, and we compete on other things like service. So I don't have an issue with that. And I think it's important to reach out to other business owners, and our business owners are very open to helping you. When I was out in California, I met a lot of interesting people, and through them, I met some of the people that I use now for some of my work. And, it's been great. They're fantastic. And I also look at the background of the people providing that service. So one of the guys that I work with, he was himself a business owner. His background is digital marketing, but he ran his own business. So he understands where I'm coming from. That's important. Some of these younger kids, they're very good at digital marketing, but they've never run their own business. They've
never had the risk on their own either.
Exactly. In all honesty, if I've learned anything, and any piece of advice to people, is get off Groupon.
Thank you. Thank you for saying that. There's so many reasons why.
There's a myriad of reasons.
And one of the things that people fight with me why they don't want to get off Groupon is they say, well, we bring them in and then we sell them into other services, or they buy more.
The thing is, you can do the Groupon thing yourself. You don't need Groupon. And you save your reputation more, I believe. And also you'll find actually that those clients that you bring in, doing through your own digital marketing, even though what you're offering is probably the same as you would offer on Groupon, they will be more loyal.
Yeah, because they're not looking for another Groupon. They're not just looking for the next sale. And you said your reputation, you're not branding yourself as a discounted brand, even if you're offering it on your own. When you align yourself with a Groupon.
I just don't see why any medical spa should be on Groupon.
Yeah, I agree.
Unfortunately, we have some couple of residual campaigns that I'm trying to get out of that have been on there for years from the previous owners. But I can't wait to get off it fast enough, because I just don't think a professional services such as ours have any place on Groupon. It works for restaurants or other retailers, but come on, we're in the business of aesthetic medicine. That shouldn't be on Groupon.
Yeah, it's not about price.
No, absolutely not. It's got to be all about outcomes and ethics.
Yeah. I really enjoyed this conversation. Thank you so much. And I would love to have you on again. And
You're welcome. Thank you for having me. I hope that what we've discussed will be of some benefit to some of our colleagues out there.
Without a doubt. And if people wanted to learn more about you and your med spas, where can they find you guys?
So they can either reach me at my email, which is Ramin, Ramin, at medspa.com. That's probably the easiest way to reach me. Or they can just go onto our website, medspa.com. And then the number is there. They can call and they can reach me that way as well.
Perfect. Thank you so much for being on.
You're welcome, April. Thank you for having me.